Hey traders, this is Christian from Tribeca Trade Group, and this is your end of day recap for Tuesday, March 22nd. The rally continues in equities. Some really nice moves, especially in the growth stocks. We will go through, I've got about 8-9 symbols to maybe get through in terms of stocks. I want to go through some of these moves in front of us. S&P was up 1.1% today. So if we kind of look at if we go ahead and if we look at the recent performance, just kind of going back and looking at what we saw last week, last week, first day of the week was poor, that's where we saw the kind of the last bit of volatility, where the S&P was down about 70 basis points. 1, 2, 3, 4, 4 straight days of at least plus 1% move. And then yesterday, was kind of a choppy session. The market was a little bit weak intraday with Powell speaking, and then kind of came back to essentially flat for the day. And then we have another up 1.2% day. If you want to look at the Qs too, just as a visualization purpose, but maybe a little bit more dramatic in both directions. Last Monday, not yesterday, but the Monday before, down 1.9%, and then look at the performance since then. So very strong, and yeah, and even yesterday, I think at one point the Qs were down a little bit more than 1%, but all in all, only down fractionally for the day, and really strong performance today. That's what led. The small caps also look kind of interesting here, up 1% for the session. The VIX below 23. So, once that was kind of cracked in the VIX last week, kind of start here just for a second, just to look at volatility. But once that kind of cracked about a week and a half ago, 2 weeks ago, when we had that bullish divergence, when the VIX went down, with the S&P went down a couple of weeks ago. Since then, that was a really good signal. Hindsight 2020, because we're now all the way back down. 1, 2, 3, 4, 5. Even yesterday, there was a red bar with the market down a little bit. So volatility has really come out of this market. We're back down, I guess you could say, to the lower 20s. Almost, you could maybe say mid 20s as well, considering we're right at that 23 level. So that's what's going on there. Let's move back to the S&P. Let's talk about the S&P chart a second, and then we'll go over some of the sector moves. But we are back above the 200-day moving average. We haven't seen that since the middle of February, right? So 216. So we've kind of come up with some type of abstract, maybe W pattern, right? Here's your lower arch of that W, and then spent some time here. So again, sometimes these patterns, if you're looking for these patterns to be perfect, you're going to be waiting a long time, because they're not always perfect. And then we're back above, after a bit of a doji yesterday, right? We are back above the 200-day moving average. Top of value would be 45.62. That's one area to watch. But I think overall, because I'm going to talk about some short-term resistance here in just a second, but this was kind of what really got me interested, was looking at this weekly chart. Last week, I said, hey, I think we got a chance to kind of turn the corner. Mentioned that in the trading room, we did, and we're kind of building off of that. We're above this downtrend line and floating up. Also, one other point to make, right? I'm going to get to a couple negatives in just a second. Not really negatives, but just some things to watch. But what also has been nice to see is the market breadth has been confirming this move higher. Just about every day where we've seen this rally take place, we see this dark green here on your bottom left of the screen. That's our market breadth indicator. Just kind of tells us if there's some volume, decent volume with going on with different exchanges. But this is good, right? So, eventually, I don't want to say eventually, but at any time, right, you're going to look, as we've been moving up very nicely for the last week, you're going to want to spot some divergences, something that doesn't add up on the way up. So far, we're not seeing that, right? We're seeing the advance, much more advancing names versus declining names, and that's exactly what you want to see with the move up. Today, 24 advancers, 6 decliners in the Dow, S&P 364 versus 138, and look at the Nasdaq, 2112 versus 701, right? So I think what a lot of people are doing right now is they have in the back of their mind that 2022 has been a difficult year, right? And a lot of people have kind of gotten back into that. They've got that muscle memory ready to go to kind of short stocks, after a couple days of rally. I can tell you, I'm not really doing that. I like to kind of just go with the direction of the market and not try to be too biased, and basically let that go for as long as possible, for as long as the market is doing that, right? One of the things that I tend to look at too, which is the NYSE NIMO. I think I have this in here someplace. Maybe I don't. Maybe I don't. Let's see. I should have it someplace. Right. Since we're talking about advancing and declining issues, right? A way to kind of graphically look at that is you could look at on stock charts or any other application, the NYSE, the Mcclellan Summation Index, right? We're working off of a bullish crossover here, 10-day, right? So again, nothing is 100% certain, but it just kind of shows us right now we're in the mode of expansionary breath right now. So again, like yesterday was a bit flat and so forth, it doesn't mean that we can't have a little bit of retracement, but I try to just go with the direction, right? Now, remember, shorting and that kind of thing worked really well when the breath was nasty, and that's something that I look for on a day-to-day basis. So again, I don't have my mind completely, oh, we're definitely doing this or we're definitely doing that. I let the market dictate what I'm doing, right? And when I see divergences or things that I don't like, then I will sometimes take the other side of the market. Right now, I think it's steady as she goes, and just continue to kind of look for things and try to be on the right side of the market, right? The reason why I bring this up is, like I said, I see a lot of people that they're thinking about what happened so far this year, and they're automatically trying to go against this market, starting to short again. Again, that's not for me until I see a signal, right? Where I make the majority of, or where I usually make money, is going with the direction of the market, not going against the direction of the market, right? Again, we always try to look for warning signals, things that don't make sense, right, that are going on in the market. And it's always a probability game, right? Because no one knows what's going to happen day to day, but we use the information that we have at hand, and then we go from there and we make some decisions. So yes, there's another one of these VPOCs taken out. I do want to mention this because I've talked about this a couple times. I said, hey, if we take this VPOC out, I might be kind of a seller of some names. Similarly in the NASDAQ, which I haven't talked about too, we have also taken out this virgin point of control, right, on the upside, right? So again, why are these things important, right? Because it is where there's supply usually in the market, right? The red lines are virgin point of controls so we are retracing levels, and the red line will occur where we've have a lot of volume previously, right? So this was this week, particularly back here on 215, 216, where we did not go through this point of control in this value area. So whenever we don't go through a point of control in a value area, it leaves one of these red lines behind, which become important, right, when we start to gravitate back up to them. So here's another one, right? This one is different because we weren't even in the value area this period. We were for this particular week, we were below value the whole period, right? So so that's a pretty good VPOC to watch if we get back above this one here in the Qs. But I like to stick to what I was saying. So, I didn't really do much trading at the end of the day, other than some kicking around some day trades, because I want to see if we get a little bit of a retracement. So again, I'm not betting against the market. I'm just being cognizant of a couple of my short-term upside targets have been achieved. All right, so that's quick thoughts on the index. I really actually like this IWM, right? You can see that there's no red lines around here, which is a good thing, right? Because we want to see an open playing field, right? You don't want to be, I always kind of think of this as terms of a football field and a running back, right? If you've got two linebackers in front of you, right, you know it's going to be tricky. If you've got an open field in front of you, then it might be a little bit easier. So I like this move out of the value area. I also like to define support here at 204.82. So I'm kind of favoring the small caps here a little bit, just for a move like back into this range. I know that we've got this whole range up here, but let's go back to this 1 hour chart for a second. We don't have anything like right in front of us, right? So you got like a safety back here, right? But you don't have any linebackers right in front of you, or a defensive line. So if the market wants to continue to trend, if there's some buyers, more aggressive buyers than more aggressive sellers, then maybe we could see a move up to 215, 216 there in IWM. Let's get back to the spreadsheet. I wanted to talk about bonds, right? People, I see a lot of people talking about, this is not a good thing for the market. This is not a good thing for the market. I would agree with that. I'm surprised, and I even put on a trade in the financials today, thinking like this has got to be good for the financials. Maybe I'm a little bit early. I got into some the regional banking ETF. You know, I've been watching as well how well the Canadian banks are doing. I mean, they have really been doing. I think BMO is the one that I'm thinking of, really outperforming. The one that I also keep looking at is this TD. Right, which is continuing to trend since. So here's a good example, by the way, of a VPOC being taken out, or almost. It looks like it is almost taken out right at this 74. So you can see the reversal off of that. I'm going to say this is close enough here on my chart, but you can see. So here's a good example of a VPOC reversal. Right, goes basically down here and takes that out. Right. So, but these Canadian banks are acting much better, and I don't know exactly why. Maybe the interest rates are a little bit higher there. But yes, it should be, right. You would think logically this is kind of a concern for growth stocks, but right now it's not weighing on them. And it could be just because there's more buyers right now in this market. Right, there's more people that have been under positioned in equities, and there's more buying going on. Right, I think people sold a little bit too much. Right, that's my explanation for that. So even though there's a headwind here, which is higher interest rates, and ultimately I got the weekly chart. This is where I think that we could be going here, which is a little bit further. Right. So keep in mind, this is where we were back in 2019, 2018. We're kind of getting back into that level with bonds. So there'll be something to watch in the coming days if the market, tends to look at this. Also, I just find that it's funny that growth stocks are not paying attention, and neither are banks. Right, banks are a beneficiary normally of higher rates like this, but they're not right now. So they're barely even moving. Right? And I was looking at some things like Wells Fargo got off to a good start today, and a couple others. So we'll just kind of have to keep that in the back of our mind that overall interest rates going higher shouldn't be the best thing that's going on. Going back to the spreadsheet, top of the list, which is one of the things that I've been kind of wondering about over the last couple months, is when are these biotechs, right, going to start acting a bit better? Right, that is also, believe it or not, something that is that you want to see on rallies, is you want to see biotech, because biotech is a little bit more risk on, and that's something that I actually like to see for confirmation. Right, is to see the biotech strong, right, when you've got a rally going on. Right, we have not really seen that, and you could see that they're trying to put in perhaps a bottom. You do have a bullish divergence. RSI, the XBI did make a new low here, but the RSI did not. So weekly chart, this is going to be a little bit challenged, but here's another example. Here's another VPOC takeout. Right, we went a little bit lower. And maybe we could start to kind of retrace a little bit of the reversion to the mean. So that was your best looking group for the day, or one of them. The cyber ETF did very well as well. This is one of my favorite charts right now. Look at it on the weekly first. Right, so this is the whole group. Right, and I was talking about this. I was on Benzinga today, and we were talking about cyber names. And we went through a couple of them, and I said, you know what, this is an easier way, in my opinion, to kind of play the whole group. You had Cloudflare up 10% today. Sentinel One, which remember had decent earnings about a week ago, up 7%. Ping, Crowd, Cyber, Zscaler, Sale, VRNS. So weekly chart back above, back above value for the year, back above the value area, also above the value area for March, right? And also the 200-day moving average. So this looks pretty darn good, right, for a move. And if you want to put a trend line in here, you could do that. You could maybe draw it even in here to some extent, and you've got to move over there. So that was of course, I'm going to talk about that because that was one of the strongest groups. The internet stocks acted well. Software, again, so it was a decent growth move today. Again, very interesting. What are they saying here? There's a headline here. Abbott plant found unsanitary. That's not good. Months before formula recall. So that's probably going to weigh on that stock. Chinese internets, again, a lot of momentum driven off of BABA. Consumer discretionary. So again, interesting because yesterday we saw value outperform. You could see on the right here, value is now up 1% year to date. So leading growth, not that far behind, down 10%, and outperforming today. So and some of the names that really outperformed were down, but not that much. XME had a huge day yesterday. I spent a lot of time, I talked about relative strength yesterday. This is not bad. To see XME after that huge move yesterday, just down a little bit today, and actually hit a high of 61.69 and moved back. So we were talking about this too. Every time that this group for the last couple of weeks has been down. Now, I wouldn't really consider this down or dipping, but it'll be interesting to see if this just continues to go higher. Interesting. There's a little bit of divergence to the upside here. Right here was your the high point here in this RSI. So a little bit of a bearish divergence in the metals and mining group, but we see that sometimes. But still, some people like to kind of note those things that that's just see. And steel was actually down fractionally for the day. So again, some of these areas that were very strong yesterday taking a little bit of a breather. Some stocks that I wanted to go over. This was, let me just bring up our watch list. Here's our weekend watch list. I spent a lot of time on the weekends putting this together, so quite pleased at how this is. Tesla was the top of our list. We spent some time talking about Tesla over the weekend as well as Friday. I tweeted it out saying that this is a pretty bullish look for Tesla. Right. I showed that weekly chart where you got your first bar above the value area for 2022, and it took out, like, kind of engulfed three of these previous candle bodies, here, and here, and now you've got that nice continuation. So this was one heck of a move today, up about 8%. I have this in the TTG trend portfolio. I actually just increased the weight slightly last week. Unfortunately, I didn't trade it today. I just kind of missed the move a bit. I saw all the option activity, just a lot of option activity in leaps going out a bit. So that's good. That's what you want to see. So, I think if you're looking at this, and if you're like me, and in my trading account I didn't trade it, I would wait for just a little bit of a pullback, like some type of an inside day. Right, this market will give you chances, don't worry. And then upside, I see a VPOC up here at 1038. I also see three of these VPOCs up here, 1029, 1063, 1098 on the 1 hour time frame. So you're going to have some more retracement, some overhead supply to get through. And I would be looking forward to a little bit, any type of a pullback. I think I would be interested in that. So that's the first stock that I wanted to go over. Another one, when you look at the weekly bar, is showing by the way, nice candle last week in Apple, and a move over the downtrend line, right? And this is one that's not that expensive, right? I've got a downtrend line drawn here. We're now above it. and an inside day after 1, 2, 3, 4, 5, 6 straight green candles, right? So, a little bit of digestion I think would be good for Apple. That's also another member of the TTG trend portfolio. Also, I talked earlier in this video about virgin point of control reversals. Like, look at this one. That was perfect, right? All the way down to it, took it out, and there's a reversal. So again, I talked about a couple of these things in the index on the short-term time frame, right? But again, here's a great example, right? So this is this virgin point of control. Notice again here, the price just barely got into the value area, did not pass through this point of control where all the volume was concentrated in for the previous period. It went down here, took this level out and reversed. So a great example of how you can use a virgin point of control using the market webs, using volume at price to look for a possible reversal in a name. All right, that's the second name. Another name, I actually went to lunch here in New York City today. I went to Sweet Green. I just think kind of an interesting play. So again, a little bit something different for you. This name had a nice move. And here's what I mean by digestion, or a little bit of a dip, right? Move back to the 20-day moving average and almost a bullish engulfing candle, but this is something that I'm watching for tomorrow. Cadence, not one that you hear too much anymore, right? Maybe last year or years past a little bit more, but I love this inverted head and shoulders look. Left shoulder, head, right shoulder, right? And this is trying to get above here, right? So again, how would I trade this? Use a stop right at the 200-day moving average. Maybe look for a target here at 164. Really like that chart look in Cadence. And again, not really extended. It has made a nice move off the lows, right? Next one that I'm going to be watching tomorrow is Solar Edge. It's been going back and forth. This theme had a secondary, handled it pretty well. Again, let's look at the weekly chart. What I'm looking for is a move above 315 by the end of the week, right? Because this is, of course, a developing weekly bar. Might as well talk a little bit about Google too, right? Starting to kind of curl higher here. This was a big uptrend for 2021, has been just digesting here. But I like the price action in here. You're going to have to get through some resistance, 28.42. Of course, you could use that as a short-term target, but that's also first bar above the 200-day moving average. See the theme of the day today? Kind of the 200-day moving average. Well, not so much. I'm going to ruin the theme of the day. Just something a little bit different here. This is the Brazilian stock. Merco Libre has made a nice little move from the lows. I like this. I looked at this name a couple days ago. I didn't want to get involved just because of this, right? There was this version point of control up here. We went ahead and we took it out. You had a small step back yesterday, doji, and pretty nice performance. So let's see if this thing wants to start to trend a little bit. All right, 1330 could be a level to watch to the upside for Melly. All right, and then last one is TMO. All right, just something I'm watching. This one probably of the list that I mentioned, I like the least, but I do like the company. I like the management. I also like that it's back above the 200-day moving average, kind of consolidating here, was down a little bit today. Just something maybe to keep an eye on. All right, guys, that's it for today's video. Again, there's not much to really complain about. Maybe that we're a bit overbought in the short term. Those VPOCs, short-term VPOCs being taken out on the 1-hour time frame, S&P and in the Qs may indicate that we might have a little bit of digestion coming for the rest of the week. I think even if we get a little bit of volatility, like we saw yesterday, because I do believe Powell speaks again tomorrow, I would actually welcome that. It could be a nice opportunity, and we might see buyers kind of come in back into a little bit of a dip right now in this market. All right, guys, thanks for watching. Have a great night. See you tomorrow.